Hey, Kevin here, Top 100 Financial Advisor, two-time author, one-time bestseller, and we are here to talk about the stock market. I'll keep it short. I'll keep it sweet. It's Friday. I want to let you guys know what happened this week for the market, why it happened, or at least a theory as to why it happened, because sometimes the market just drops and just drops. No logical reason. Sometimes the market can be a toddler where they just, for no reason at all, flip, fall on the floor, and just roll around and throw a fit for God knows why. But there was a little bit of a logic as to why the market fell off. Some people are blaming Elon Musk. That's fine. But it's more so tied to broader economic fears. And sometimes fears aren't logical. And that's what I saw from this week. Basically, we had an indicator that for at one point that inflation was going to go up. So inflation is the rising cost of goods. You got real bad college inflation now. When you look at the price of what college was in the 80s, it's compared to what it is now. But overall, we're talking about bread, milk, the basket of goods that most people buy. We measure this called using the Consumer Price Index (CPI). So aside from all that, we had some indications that inflation was rising a bit. It actually kind of dipped down, so we're actually pretty fine. But that is a concern because, number one, nobody likes paying more for stuff. Inflation to a certain degree is normal. I believe the Federal Reserve is trying to keep inflation between like 2 and 3%, or they have a target of where they want to keep inflation because inflation is relatively natural. As we get more things, become better at stuff, we have new technologies, things start to increase in price because it costs us more to do those things. And then also things drop in price because we get better at things. Computers used to be mad expensive, right? That's not the case anymore. Same thing with phones and TVs and all types of stuff. The first flat screen was really, really like a status symbol. Now everybody's got one, right? But on the opposite end, things do start to increase in price just a little bit. Gas prices could be one, not the best example, but milk, bread, hamburgers is my favorite because you can look at all those old shows. You can get like a hamburger for a penny, right? Now they're like $3, $4, $5. So aside from all that, that's what inflation is. However, to quell inflation, you have to raise interest rates. Interest rates are the rates that we pay for debt, student loans, credit cards, all that kind of stuff. And it's the rate that we get as savers. When interest rates change, I actually did a video on that changes how the entire economy works. So to quell that, what they do is raise interest rates. Anytime the interest rates raise, that actually lowers the stock market because investors say, look, well, if interest rates are going up, I don't want to have my money in stocks. I want to go to bonds because I can get a higher rate for bonds, and bonds are more stable and pretty much guaranteed returns as opposed to what may or may not happen in the stock market. So people were afraid. They said, oh my God, we might have inflation. If we have inflation, rates are going to go up. If rates go up, the stock market is going to go down. Let me sell now. That's pretty much what happened this week. That is the biggest theory as to what happened this week. So here's the facts. Number one, the Federal Reserve is not going to raise interest rates. They could if they wanted to, but that's probably not the case. We're not in a healthy enough market to do that. Remember, if you go back to last year, they cut interest rates like what, 3 or 4 times? The reason they cut interest rates is because when the economy is not doing well, they cut those interest rates, which helps borrowers. That lowers the interest rates on your credit cards, potentially your student loans. They actually pause student loans, but all the money that I'm paying out to people, if I need to get a loan as a business owner, I can get a loan for a home or my business super, super cheap because rates go down, which encourages me to go out and borrow and spend, which boosts the economy. That's the logic there. So if they raise interest rates, it's the opposite. And it tells me, the consumer, no, I don't want to take a loan. It's too expensive. No, I don't want to go buy a home or get a business loan because interest I could have gotten at 2%. Now it's 5%. Now it's 10%. Now they don't jump that high that quickly, but you get the point. So it tells consumers, I don't want to spend money, or I should not be spending money, or at least let me double check that. Let me think twice before just borrowing all this money at a low interest rate. So because of all of that, this is why the market fell. As an investor, that logic kind of makes sense because if I am if I'm slowing people down from spending money, then they're not going to spend money at my bank if I own shares of Merrill Lynch, not Merrill Lynch, Bank of America that owns Merrill Lynch, or Morgan Stanley, is the bank I had in my mind. If they're raising interest rates, I need to go and really go back and pay my credit card off as opposed to shopping at Walmart or Amazon. Again, These are reasons why that occurs. So the Fed is not going to raise rates. I believe they came out and said that the other day. So there's that. And then we had signs that inflation actually isn't as bad as what we thought it was. So we're actually pretty fine. So this is further confirmation that this is more discount season right now versus actual problem. Yes, we're still in the coronavirus era, but we have Johnson Johnson just dropped their, like it's an album. They just put out their vaccine. We already got 2 that are on the market right now that not everybody can get to just yet, but it's out there. It is not the same situation as what we saw last year, where it was like, this is a real pandemic and actual businesses are going to be affected in a very negative way, i.e., airlines, right? Like that was real bad for them. This is just a weird temporary blip. I can't tell you if Monday things are going to go back to normal, whatever normal is. It could be a week, could be a month. I don't know how long that's going to last. However, it does not seem to be an actual problem, like a real problem that people need to react to. The market is going to be the toddler, it's going to be the dog, it's going to flip out for no real reason. You as an investor need to stay focused. So just like I said the other day, I'm looking at ARK. I'm looking at, I actually added money to everything but ARK. The market was closed. I didn't get around to it. It was pretty busy. Added more money. If you saw me on public, which you should do, you saw me add more money to Amazon, to Microsoft, really everything across the board, but especially to those, because those are the ones I see are real value. I did not add any money to Tesla because I think it's every Tuesday I put another $25 or so in Tesla. So it's already on autopilot. So again, I don't see this as a huge issue, just like a weird temporary blip. You can get something at a discount if you believe in that company. Feel free to do that, but also DCA. If something actually happens, something we should be concerned and kind of switch our strategy around, which we saw last year, then we'll come back and talk about that. For example, and I know I'm ranting now, but for example, I thought Southwest and probably previous to the crash, Boeing were like the best of the airline industry. But once things absolutely tanked last year, it may or may not have been the best time to like really hold on to those. I got out of my airline stocks in 2019 before this whole thing hit, just because it just had not performed. The entire airline industry prior to the virus had not been good, other than Boeing, which that's actually in a separate category. But Southwest was one of the only airlines that was positive, and the only airline in the U.S. business that was even better than the S&P 500, and it wasn't by a whole lot. So you always want to take that context into effect. But right now, based on what we saw this week, it's just a weird week. The market doesn't always make sense. Stay focused on what you want to be focused on. I don't think this really means anything in the bigger picture. Is really a way to shake out who's real and who's fake in terms of, do you know what you're investing in? Are you a confident investor, and do you have a real strategy? If you had a real strategy and a real plan, this really didn't bother you at all. You was minding your business. If you don't have one, you're probably freaking out. You didn't have a stop loss order. You're acting a fool, like, oh my God, I lost so much. Don't be that dude. Don't be that girl. Relax. All right, that's it for me. I'll talk to you guys later.